The good news about breakout trading is that it's really easy to spot opportunities with the naked eye. Once you get used to the signs of breakouts, you'll be able to spot good potential trades fairly quickly. Let's talk about how to trade breakouts with chart patterns, trend lines, channels, and triangles. If you remember back to the chart patterns module, there are a few chart patterns that indicate a reversal breakout. For example, we have the double top and double bottom, head and shoulders, inverse head and shoulders, and a few more. You can go back to that module if you need a refresher. Another way to spot a possible breakout is by drawing trend lines on a chart. Remember, when drawing trend lines, it is best if you can connect at least two tops or bottoms, as you can see here. The more tops or bottoms that connect, the stronger the trend line. So after drawing the trend line, how can you use it to your advantage? Well, when price approaches your trend line, the price could either bounce off the trend line and continue the same trend, or the price could break out through the trend line and cause a reversal. And that's definitely a breakout that we want to take advantage of. However, just simply looking at the price is not enough. It would be good to use other indicators as well. For example, you can see here that as GBP JPY broke the trend line, MACD was showing bullish momentum. Using this information, we can safely say that the breakout will continue to push the pound up, so we should buy this pair. Another great way to spot a breakout opportunity is by drawing trend channels. Remember, to draw a channel, we just draw a trend line and then make a copy of that line and move it on the other side of the candles. The nice thing about channels is you can spot breakouts on either side of the trend. Just like with trend lines, we would want to wait for the price to reach one of the channel lines and then look at another indicator to help us make our decision of whether or not price is actually breaking out. Finally, you can find good breakout opportunities by looking for triangles in the market. Triangles are formed when the market starts off volatile, just like you can see here, and begins to consolidate into a tight range. We want to be ready for the breakout once the market has consolidated. If you remember from a previous section, there are three types of triangles. We have the ascending triangle, descending triangle, and symmetrical triangle. We learned that ascending triangles form when there's a resistance level and the price continues to make higher lows. What this triangle tells us is that every time the price reaches a certain high, a lot of traders decide to sell at that level, so price drops back down. But then as price drops back down, traders believe price should be higher and begin to buy again. So there's a struggle back and forth between the bulls and the bears. What we are looking for is a breakout to the upside, since ascending triangles are generally bullish signals. When we see the resistance level has been broken, we buy. Descending triangles are basically the opposite of ascending triangles. Sellers are continuing to put pressure on the buyers, and as a result, we start to see lower highs met by a strong support level, just like you can see here. Descending triangles are generally bearish signals. So to take advantage of this, we sell once there's a breakout below the support level. Then we have symmetrical triangles. With symmetrical triangles, there's no horizontal support or resistance level, so there's no directional bias. You need to be ready to trade the breakout on either side of this triangle. So if it breaks to the upside, you want to be ready, and if it breaks to the downside, you want to be ready. In this example, with GBP USD, it broke on the upside and our long entry was triggered. So because we had pending orders placed on each side of this triangle, once it broke to the upside, then our pending order would have been triggered, our buy order, and we would have taken advantage of this entire move. So in summary, ascending triangles usually break to the upside, descending triangles usually break to the downside, and symmetrical triangles can break on either side.
Hey, thanks so much for watching. Make sure you join our free Discord channel to get access to all the cheat sheets and a bunch of other cool bonuses. The next video in the course is right here.